Hey, good morning, everyone. Welcome to our episode number 3 of our OpEx webinar, brought to you by the Institute for Operational Excellence. Today we have another guest on the webinar, which is great, and we're going to be talking about how we apply operational excellence in banking to really sort of leapfrog your performance and make some important change in a quick and effective manner. So that's a new area for us to talk about, which is cool. And we've got a really great guest, Kumpf, on today, and I think we'll get a really good discussion. So just before we get into that, there's a little bit about me. Everyone is going to get, you can obviously see these slides in a recording. You can get them on YouTube, or we'll email them out. My email address is there, so if there's anything, any questions or anything you would like to ask us after the webinar, you are welcome to email me at any time. You could also find me on LinkedIn as well. I'm not sure if Kyle is going to give out his email address, but if you have questions for him, you could either find him on LinkedIn as well or email me and I could connect you with him. Moving right along, as usual, I just wanted to make mention of the fact that we've got an open enrollment training event coming up. This one's going to be in Anaheim. I think it's our last one for 2017. 3 days focused on manufacturing and 1 day focused on the office. So if you're interested in coming along, either go to the webpage that's listed there, or by all means send me an email at that address, and I'm happy to answer any questions and help you out with the registration if need be. Okay, so moving along to talk about today's content a little bit before we hand over to Kyle. On the next slide, we've got a picture of Kyle there, so you can see what he looks like, which is always good. And a little bit there about what we're going to be talking about. Some background about how I know Kyle. Kyle's a little bit different for the show as it's unfolded thus far. Kyle and I have never actually worked together. So we have talked about it, and we have sort of crossed paths in various forums and LinkedIn and things like that. And I think we've had 1 or 2 people from Heartland Financial attend some of our open enrollment events. But all the work Kyle is going to talk about today is certainly work that they have done on their own. Now, the reason I asked Kyle to come on is he's, for any of you who know him, or maybe people that are going to connect with Kyle, he's really active on social media, and he shares a lot of the work that he does. So, as someone who was connected with him, he often posts things that tweak my interest, and every now and again we chat on them. And I thought, with that in mind, he'd be a good guest for the webinar, because he's out there really trying to apply a lot of different tools, and from what I can see, getting some good results. So, the material he presents today will be new to me as well as you guys. I'll ask him lots of questions, and we've got some audience questions that are certainly going to get asked as well. We'll try and make it as interactive as we can. And again, I'm sure Kyle will give you some details, but I know, you'd be more than welcome to connect with him on LinkedIn, or maybe on Twitter or other platforms as well. So with that in mind, I'm going to pass it over to Kyle now. I'm going to hand the screen over to him, and it'd be great if Kyle, you could introduce yourself a little bit, give us a bit of background as well, and then jump into your material. So now we should be switching over to Kyle now. There we go. And Kyle, are you on audio? There we go.
Can everyone hear me?
We can.
Awesome. I will go ahead and get started then. Whoops.
Yeah, the technical piece of this is always a good time.
Yes.
So yeah, we can see the notes page. So not sure if we can change the view there.
There we go.
There we go. Awesome.
Is that better? Okay.
Perfect.
Great. Well, I'll go ahead and get started then. First off, I want to say thanks to Tim and the Institute for Operational Excellence for having me be on there. Whoops, that went away again. Having me on this episode of the OpEx Webinar. It's it's okay, I'm having a little bit of a technical difficulty here, so I'm just going to present the slideshow from this view, if that's okay.
Yeah, that's fine. Not the end of the world at all.
Yes. So first, a little bit about myself. I'm from a small Indiana town, and I've worked in some form of engineering or continuous improvement role for all of my short career. And now I find myself in banking, which I find kind of funny, because if you asked me in college while I was studying engineering that I would someday work for a bank, I would have laughed quite hard. But here I am applying that kind of thinking to the office environment. So
what
my
sort
goal
of engineer
today,
are you?
I studied packaging engineering specifically, which is very similar to industrial engineering and very close to mechanical engineering as well. Took a lot of the same overlapping classes. So, yeah. So my goal today is to give the audience a quick but real-world overview of some of the actual stuff that we've done to apply OpEx principles here at Heartland, and then leave plenty of time for questions. So to do this, I would like to present an overview of Heartland's history and its profile, present kind of our process improvement maturity here at Heartland, which I'll use to kind of crystallize with some real use cases and share some lessons learned. And then hopefully by the end, I'll be able to tie it all together with 3 key takeaways. So I'd be remiss if I didn't brag a little bit about Heartland and tell you a bit about it. It's a bank holding company based in Dubuque, Iowa, which is about 3 hours west of Chicago. It's made up of 10 member bank charters, 1 mortgage subsidiary, which is National Residential, and 1 consumer finance subsidiary, which is Citizens Finance. Altogether, these entities employ over 2,000 people who all play a part in delivering our products and services to our customers. And those products range from your typical retail checking and savings accounts up to small business commercial lending, which is our core business, all the way up to wealth advisory services and insurance and things of that nature. We have 121 banking locations that serve 88 communities across 10 states, basically between Illinois and California. We've been in growth mode over the past few years, and in a very short time have increased our assets from about $6.2 billion when I started to now about $8.2 billion, and that's soon to increase to well over $9 billion here very, very soon this year with our newest acquisition in Colorado. Earlier this year, Forbes named us one of the best banks in America, which was quite the honor. And finally, this operating model, having all these member banks and these people and these business lines, there are a lot of moving parts. But really our model allows us to have that big bank punch with a community bank touch, which you will hear our CEO, Butch Fuller, often say. And this really requires us to have a great back office to support that operating model, which is actually a good segue into talking a little bit about where Heartland started with process improvement to where it is now and what we've been able to achieve to this point. Now, keep in mind, Tim said earlier that he or I have worked together directly, and at Heartland we have not adopted one single method or process for improving our value streams and our processes. But one of the luxuries I have in my role is to be able to take whatever knowledge I'm able to learn and apply it here and try and facilitate others along with me. So we've used operational excellence, Lean, Six Sigma to some extent over the past few years. So to give you some background in the beginning, in early 2014, our leadership decided that the company needed to have an organizational focus on process improvement in general, which started by the hiring of my manager, the director of process improvement, and he began a bottom-up approach to PI. Following that, in 2015, we continued to mature PI, I was hired in May. More resources were dedicated and improvement projects were launched, again, following that bottom-up approach. And then moving into 2016, we launched the Project Management Office, as we refer to it, the PMO. We did this both out of necessity and also to follow the best practices of other larger financial institutions. This added structure added a top-down component to projects and process improvement to kind of close that loop. So we have the bottom-up and top-down. And then now in 2017, we've really been focused more on maturing that model and then also building the organizational capacity and skills for process improvement and OpEx and all those things, because we believe that our success will be better if we have those skills out across more people instead of just a few. So with all that, there's been a lot accomplished to this point. We've had over a couple hundred projects done, and millions of dollars in gains have been delivered. And ultimately, this has allowed Heartland over the past 4 years to become 14% more efficient versus 7% for our high-performing peers. Now, this is indicated by our efficiency ratio, which for those of you who are unfamiliar with this term, it's a key bank performance indicator, and in its simplest form, it indicates how much money it takes a bank must spend in order to make a dollar. So if it costs you 75 cents to make $1, then the efficiency ratio is 75%. And logically, this is a lower is better metric, but there is only so low you can go. But some of the really, really great high-performing banks are down in the the low 50s, to give you an idea of where a good benchmark for that number is.
Kyle, what's the on your slide there, you've got $8 million in earnings. Does that mean you guys have enabled, your improvement efforts have enabled an additional $8 million in earnings, or?
Yeah. So these are like in addition to what was budgeted.
Okay.
We'll be able to look at that. So
Wow.
these are extras. Yeah.
That's great.
Yeah. So we've had a lot of great success.
Yeah, it's good to see it adding to being able to quantify it in terms of its contribution to sales and earnings, not just its cost reduction. That's great.
Yeah, and that's what's helped us in our efficiency ratio.
Cool.
All right, so now we'll kind of jump more into the operational excellence side of the presentation. OpEx is often described as a destination, and in order to reach a destination, you must start moving towards it. And while we here at Heartland have begun moving forward, we have not yet reached the destination. On this slide here, I've included the 8 operational excellence principles in a timeline form, in an effort to kind of show you where we are. So the first of those principles is to design lean value streams, and that has 5 basic steps, which I've listed out there. And the 2 in bold, from my experience, are the most difficult. And I'm sure Tim and probably most others on this webinar who are familiar with OpEx would probably agree. But this is really this is really the area we've been focusing on here in my time at Heartland.
Okay.
We have dabbled in the others. I say dabbled. It's not we haven't ignored them. They haven't been the primary or gotten as much focus as that first one. So over the next few slides, I want to present 3 actual examples of how we have progressively gotten better at the guidelines and the principles, and offer a lesson learned or 2 for each.
Okay, great.
But first, I'll start off by showing this quote. I have this hanging on my door, and I look at it daily, and I think it really captures what it takes to get people and an organization to get moving forward. We've done a lot of this here at Heartland. We've done the multiple demonstrations, the rehearsals, the attempts to say, hey guys, here's what's possible, as it relates to improving our value streams and our processes. And we've made tremendous headway, and it's really opened people's minds to what is possible. So it's been really cool to see that.
It sounds very, very familiar. the repeated attempts, endless demonstrations. That's, you know, that sums it up really, doesn't it? Trying to make these kinds of changes. That's good.
Yeah, it does take some patience, and if you get 6, great buying the first time, kudos to you. Package that and sell that.
Who is Warren Bennett, Kyle? I've not come across Warren Bennett.
You would ask me that question. I did a quick search on him. I know he is a what I would call a leader, and he's written some leadership books. I'm not sure where his professional experience, like companies he worked for, but I do know he's written some leadership books. And actually, my first intern I had gave me this and wrote me a little personal note saying how they thought that I actually I lived this quote. And so since that time, a couple of years ago, that's really stuck with me. And this is a quote that inspires me every day.
Awesome. Good job, Warren.
So, as I said earlier, our core business is commercial lending, and commercial underwriting was the first business unit to attempt designing a lean value stream using mainly product families and FIFO to try and create flow. The average turnaround time, or I guess what spurred this opportunity, was that our current turnaround time for commercial underwriting was about 18 days, and our goal or our destination was 11. So I remember first walking my manager through, the lean techniques and guidelines that I believed could help us achieve this, and he agreed, and then immediately asked, can you present this to the broader group to get their buy-in this afternoon? And keep in mind, this was day 5 for me on this job. I barely knew how to spell loan at this point because I was so new to banking. And nonetheless, I agreed. And later that afternoon, I had an audience of senior lenders, credit officers, business analysts, our chief credit officer, among others, who listened to me present what I had earlier talked to my boss with. And conceptually, they said, yeah, that makes sense. However, they weren't sold that everything that I was presenting was possible. Nonetheless, we did move forward. They decided we're going to go ahead and give this a try. So we set out, we created a product family matrix, which showed we had one product family. Then we created a current state value stream map. We used most of the guidelines to help us create that future state, and then accompany that with an implementation plan. So after working through this, our initial leap and after some incremental changes, we got the average turnaround time down to 12 days, which is close, but not the goal. But it was a 33% reduction in turnaround time. However, the average turnaround time was only part of the goal, because after all, it's an average, which means there are instances that they're not the average. I once heard a consultant say, I think this was in one of my Six Sigma training classes, that customers feel variation, not an average. So if you take a drive-through, for example, the average wait time might be 12 minutes, and if you experience that or below that, you're probably pretty happy. However, if your wait time is 15, 17, 20 minutes, you probably couldn't care less about the average. So this is where I personally love the guaranteed turnaround time that OpEx can offer, because it gives the customers the ability to know exactly when they will be receiving their food or their order from you.
Yeah. We often, when we're talking about lead times like that, Kyle, we often tell people, even if they feel like some days they're going to be able to beat that lead time, that guaranteed turnaround time, you always want to know it and present it to your customers, because there's nothing wrong with beating it, but you don't want to be outside of it, because you're right, they get pretty upset when that happens.
Mm-hmm. Yeah, so if you look down here at the lower right of the slide, to give you an idea of how much better we got at delivering that turnaround time, and when we started, 37% of the time, we hit that 11 days. After the initial leap, we got that up to 68%, and then after some small changes, we got that up to 85%. So still not a guaranteed turnaround time, but it was a 56% improvement overall, relatively quickly, which was awesome.
And is it the kind of value stream where you may never hit 100 because while there, are there just some loans that are, there's always going to be some that are just so complex and maybe left field that they're just always going to be those outliers that do need a lot of time? Or do you believe that you can truly guarantee a turnaround time?
Yeah, so full disclosure, our goal is 95%, because just like you said there are going to be those times with, especially in commercial lending and other types of lending, yes, I believe you actually can hit 100%. But in commercial, it is, for those deals, I mean, you're talking millions of dollars. Those deals can be really complex, which I'll get into in a second, which is why I don't think we hit that target. So earlier I said we designed a value stream for one product family. It turns out that should have been multiple, because even though all these loans are going through the same steps for each of those products, the time involved within each is not within that tolerance, not within that 30% within each other, due to factors like loan amount. Certain loan amounts require more analysis and maybe an extra sign-off, which requires another handoff, which requires another some waiting time in there or something, or some other complexities of the company financials that could tie into that. So yes, we are shooting for 95%, but 100% really is not realistic. We can shoot for it, but we're probably never going to get it, just given the nature of that business. But the first real lesson learned here for us was that precise product family analysis is key if you want to achieve those ambitious turnaround time goals.
Okay.
So then moving on, taking what we had learned from the commercial side, it allowed us to build upon that initial success and take it to small business underwriting, so a less complex area of the company, to see what we could do better there. So here we created better product families. We use more detailed criteria like dollar tiers, more granular product types, complete application. So obviously an incomplete application or incomplete information would break down a value stream. If we're trying to put both complete and incomplete apps to the same value stream, we're probably going to get similar results that we did in commercial. So we had those broken out. And so with this one, we actually had 2 product families. And this led to better value stream design and implementation, which ultimately yielded an 82% reduction in turnaround time for small business underwriting. So we started off at about 2.8 days, and now our average is a half a day.
Wow.
So and better yet, the jump went from hitting that goal 67% of the time up to 94% and then to 95%, which is something that early on the stakeholders didn't believe was possible. But this success really helped open their eyes to what the possibilities were. We're probably thinking, maybe Kyle's not so crazy with what he's talking about. So it's been good, but however, it's still not a guarantee, but we can pretty confidently say if you come in for a small business loan in this product family, you can get a good idea of when you're going to have your loan, when you're going to have your decision.
So the main result was demonstrating that Kyle is not crazy.
Yeah.
That's good. So with the it's really interesting. So the 2 slides that you showed, so commercial lending going into small business underwriting. Did you pick the more complex one to do first on purpose, or is that just the way it panned out? Was that was that a calculated move or not?
That was just by the way it kind of fell into my lap. So that there was already a task force launched and trying to work on that whole value stream before I even started. My first day on the job was about halfway through that, and so then I was involved in their midpoint report out, and at that point that's where I said, hey, I think we can do these things. So when I talk about day 5 of me on job presenting to people, that's what I was talking about, and commercial was the priority, the hot button at that point, and so that's why we started there.
Okay. I ask because I often start, if I've got a more complex and a lesser complex option, I often start with the complex one in the office, because sometimes the simpler one, you see its value stream develop very quickly once you've already done the complex one. So it makes other stuff easier. Is that the experience you had? Like this came together a bit more easily after you'd been through the commercial one?
Yeah, I think so. I think that did help in small business because, obviously we went to them. They were kind of skeptical. I mean, you could say, hey, this worked pretty well in commercial, which is, much more complex than your business. So it kind of helped get that buy-in to try it, and we had some good success.
Go on, sorry.
No, I was just going to say to tie up, why I think we didn't achieve everything we could there is because, again, there are 9 guidelines for a reason, and they're meant to be followed in a set order. And here we didn't do the best job at leveraging all of them, but nonetheless, still some great success.
Do you recall which ones you skipped or which ones you didn't use, or?
Yeah, I wouldn't say that we skipped. I would say we probably could have done better on the creating the TACT capabilities and doing the demand profile analysis. Could have done a better job there. That probably would have helped out a lot.
Okay. And did you? Well, are you going to cover pitch later on, or?
No. No.
Did you use pitch? So?
Yeah, that one I would say was probably not used. It was discussed, but not really used. We do have, yeah.
Yeah, it's one of the ones, I think it's number 8 on the list of 9. And so it comes later on in the game. And it often is quite key to the guaranteed turnaround time because it makes sure you're adhering to that rhythm. But yeah, that's interesting. Right, I'll let you keep going.
Yeah, that's actually probably a good segue into my next example here.
Okay.
So we took what we learned from the early attempts in commercial and small business, and then I did a lot of work with our mortgage operation. I visited there. Our mortgage is based out of Scottsdale, Arizona. So I made a few trips there, worked with their people, and to get information, present this kind of stuff to them. Actually, one of the people from there attended one of you guys' workshops last year, I believe, out there. So that, again, further opened their mind to the possibilities. And we actually did a full design for all of this. So basically created a model for, we haven't actioned this. So we went through all the details of how this would work if we were to do it in mortgage. And mortgage is one of those, it's not real complex, relatively speaking. It's a pretty straightforward lending product. Everyone gets mortgages. How you underwrite them is pretty straightforward. So with some updated data, we could update this information and start, deploying the principles, deploying the guidelines, leveraging the capabilities, pitch, tact, and all that, and the decision trees that you need to fully run this. So my point here with this slide, it's pretty messy and confusing, but that's by design because it's meant to show that if you want to leverage all that operational excellence can offer, you've got to put the work in. You've got to create the detailed value stream maps with a concrete roadmap to get you to the future destination. And that takes analyzing the demand, the mix, and the different tact capabilities, creating the workflow cycles and the decision trees, and then visually indicating, what do I do, or how do I identify something's abnormal so I can use the decision tree, and then, demonstrate what this might look like. So on the slide here, you'll see a couple pictures that I was able to borrow from a contact of where this has been used in the real world in mortgage to give an idea of what our office might turn into looking like, a more visual. Tell me, are we on time, are we not? Are we red, are we green? Along with many other things that you might need to do. So there's a significant amount of work in designing value streams that can support operational excellence, and then not only that, but there's also a people side that needs to be managed properly as well.
Yeah, it can be a challenge to maintain that discipline of having people go through all of those steps each time. It does yield a better result, but once people have done it once or twice, often they just want to skip steps, which I guess is human nature to a degree. And so you guys have or haven't implemented this value stream, Carl?
It's not implemented. Yeah,
and
so like I said,
Why did it not go forward? I mean, it looks like you did a lot of work, obviously. What held it up?
This is my attempt to prove to them that this is worth implementing. And like typical, I guess this is probably typical in a lot of organizations, especially early on in these types of things. Other regulatory-driven priorities came up. That's something that we had to deal with a lot in banking. That took resources, and something like this takes resources to implement, and we had to put those elsewhere. So this hasn't been shut down, killed. Like, no, we'll never do this. The template's there. We basically at this point we just need to update some of the data.
Yep.
And revalidate a few things, and then we could start rolling with it. So.
Okay. Fair enough.
Yeah.
Yeah, it looks good.
Yeah. So that brings me basically towards the end here. I like to wrap this up, like I said, with three key takeaways I'd like you to remember. The first one being, and you heard me mention this throughout the presentation, is that moving forward is paramount. Staying put could have negative consequences. I learned from I heard this somewhere that the Navy, the SEALs practice the 70% rule. So if they have 70% of the information, they go because the other 30% they think will take too long to obtain. So in their world, staying put or moving forward could be the difference between life and death. Now in our businesses, it's not quite near that dire. But us staying put could, for example, hurt the bottom line or even the customer's experience. So yep. I'm not advocating for only pick 7 of the 9 guidelines or 6 of the 8 principles and only use those. I'm saying instead of trying to get the entire organization on board, just go find that small group in an area or business line, get them on board, use them, and use them as your advocates to expand it across the broader company. But nonetheless, forward progress, I think, is important in doing that.
Yeah, that's great.
Next, I would say all this involves people, and they need to be educated at every opportunity. Even as the work's being done, it's still important to explain here's why we're really, beating this tack time thing, and why it's important to have visual flow. And because this really helps to re-solidify the buy-in of the people doing this, because let's face it, the concept of operational excellence, Lean, Six Sigma, or any of those other methodologies it's much easier to grasp the concept than it actually is to practice it. So educate whenever you can to keep that buy-in and that momentum going. And then finally, going back to that Warren Bennis quote, have patience and be persistent. Keep moving forward, keep learning, keep educating, and ask for help by reading books or articles. I think I have all the books from you guys. I've read most of them and used their information to help in projects here. Or by reaching out to internal or external resources. There might be people within your organization that already know some of this stuff that could help you. Or reach out to guys like Tim. See how they might be able to enhance what you guys are already doing. I listened to Kevin on a recent webinar, and he asked the question, what if you continue to only lower cost and improve quality, however, someone else leapfrogs you with a new, better product, and now your customers no longer need you? That's a powerful question. So I'd say do whatever it takes to make sure you're innovating your value streams to deliver your products to your customer better than the competition. Everyone can be delivering value, but it takes patience and it takes persistence to do it better, faster, and more effectively than everyone else, and that's how you're going to ultimately gain the market share. That's how you're going to leapfrog your competition. And at Heartland, we aren't perfect at this, but I can say we are constantly learning and improving at it. So with that, I'd open it up for questions.
Yeah, I think that they all do wrap together nicely there. And that first key point you had there about moving forward. When I teach this stuff, I often tell people, don't get bogged down in the detail. Get it close enough and go out and try it, because it's often quite cheap to try this stuff in the office, and you learn from doing it, and you can just, you're better off moving it forward than just analyzing it to their field analysis paralysis thing. Yeah, those are great points. So yeah, we do have some questions that have come in, they've been emailed in to us, and some that have just come up while we've been going through your slides. Firstly, just a few details about your organisation. Is it a shared back office between all the member banks or the operating companies, or does each banking organisation have its own back office operation?
Nope. So our back office is centralized here in Dubuque. So you can be at one of our banks in Arizona, and you're going to apply for a small business loan. You'll talk with a banker there, do the application there, but that underwriting will come back here electronically, be done here, and then that decision then goes back to the customer in Arizona. So to a lot of our member bank customers, it's not surprising that a lot of them don't know about Heartland. They think, hey, I'm an Arizona Bank and Trust customer, and they don't know any different that what's happening behind the scenes. They think all that stuff's happening there, and in reality, the back office portion is centralized here in Dubuque, with the exception of mortgage, which is centralized in Scottsdale.
Okay. Yeah, that's interesting. And from a family perspective, when you're doing that analysis, I mean, ideally it would be a case of we don't care where it comes from, we care what path it takes once it gets in here, I suppose.
Right, yeah, because all those banks are submitting their requests through, the same channel. It's coming in through email or through one of our systems, the request is coming in. But yeah, to your point there, it's what do we do within the back office once we get it to get it back out to them and to their customer.
Yeah. Okay. One of the interesting things about this webinar, I think, is sometimes, I think last month we had Jane on, and Jane sells industrial products, and before that we had Tammy on, and although Tammy was in sort of the credit industry, but mortgages are something that a lot of us have interacted with. And, as someone who recently got a mortgage, it's annoyingly painful at times, and you can certainly see how creating those guaranteed turnaround times and getting the in-house processes sorted out would surely win you some business, because consumers really feel that pain when they're going through the process. So yeah, that's great. All right, coming right along now, back a little bit about you. A question about you. So you ex-engineer, now in bank. I guess you're still an engineer. Maybe Kevin. Kevin refers to himself as a recovering engineer, I think. Whatever that means. But so engineering to banking. All right. So what industry did you work in before banking?
Okay, so I started off working for a distribution company. So I worked in a warehouse, one of the company's largest distribution center. We were shipping out tens of thousands of orders a day during the busy season. So that played well into all this. And that's where I got my first real world experience with all of it. In school, in classes, got information. And then after that, I was a consultant for a couple of years. And I worked in healthcare, pharmaceuticals, manufacturing, and supply chain as well. And then came to banking.
So comparing your previous experience in a more engineering-based role and maybe as a consultant as well, how was banking different?
Well, for one, it's typical in a manufacturing or distribution world. The value stream is physical; you can see it. Whereas in banking and a lot of office environments, that value stream is electronic. It's in computers. The only physical part about it might be is if you have some paper involved in the process. So being able to identify what actual process is a little more difficult in banking than what it was for me to do it in those other areas. Even healthcare, even in a clinic, it's easy to, the patient comes in, it's easy to see where they come in, where they go, what's happening to them, and how they get out. It's easy to identify that process. But in banking and in the back office, it's difficult.
Yeah.
But, it's a fun challenge to get better at, and I am continually getting better at it.
Good. All right. And what sort of what was the quality of leadership support you receive or have received at Heartland, and how important was that to your success?
I would say I've gotten great support. My supervisor is very open-minded and listens to my crazy ideas and helps me formulate them in a way that we can get others buy-in. So I would say myself and the small team here in my department, we get a lot of leadership support to drive through this type of improvement.
Okay. And I mean, has that been quite important to the success? Like, have you ever worked somewhere where you've been missing that leadership support, or have you always been fortunate and had good support from up top?
Yeah, I would say I've been fortunate to usually have that support.
Okay.
Not everyone's always going to be real supportive, but I've at least gotten go ahead and try it. I've fortunately not ever been told, nope, absolutely not. I'm not even going to let you try it.
Okay. And do you ever encounter, as you go out to, the branches, or maybe not so much the branches, but the other locations, are the leaders of those locations on board too, or is it lip service, or how do you feel when you're out in the field?
No, that's a great question. We've actually done I've been to 3 or 4 of our member banks. My supervisor has been to all of them, and we actually, in the beginning, we had sit-downs with everyone. So from all the different areas in the bank, they got to come to us, learn what we were about. We got to discuss with us what they're about, what their problems were, what their pain points were, and we discussed ways of how we could help them. So they are very much on board with doing anything they can to provide input that'll allow us to do things better, which in turn allows us to better service them. So yeah, I would say they're very much on board.
It sounds like quite a consultative approach, which is good. You're not thrusting something upon them. You're talking to them about what their issues are, and then trying to help them with those issues.
Right.
That's cool. Alrighty, and tell me, you talked about how it can be a little bit more challenging in the banking environment because of the digital nature of the flowing information. Have you guys done anything to bring that out and make it visual, or bring that out and make it physical even, or is it, how have you handled that problem?
Yeah, so actually with commercial and small business, we have 2 virtual, we're calling them dashboards, but they show are we on time or not. They're red and green.
Okay.
And they have, my favorite part of them, they have what looks like a speedometer with the needle on it, and it shows how often are we hitting that turnaround time. And it can be up to the minute. So yes, we have done things like that can help us see how things are trending and see if we need to adjust.
Right. Yeah, I mean, to be able to just see it that simply and easily is a big thing. It enables everyone to adjust and react quite quickly. So hopefully it never gets too out of control. That's good. And let me just go through the list here. I think we've got a couple of others. So someone's written in to ask about the quantity of education you gave people in the value stream. So I would imagine that with each of these projects, like the commercial lending, for example, you probably had a project team, but then obviously the implementation touches a broader group of people. How much education did you provide for that broader group of people who are, they didn't design the future state maybe, but they're certainly part of it every day?
Yes, I did it in small bits and kind of repeated the same thing in small bits. So there was that initial larger group meeting where they said, yep, let's move forward and try this. And then I laid out, okay, here's the steps for doing it. And as we were going through those steps, gave them more context, more information, and then tied that back into the overall bigger picture message. So for example, when we were identifying product families and the steps each product went through, I was asking more questions and telling them, here's why this is important, here's why we need to know this, as we went, to kind of give them the, parallel the education with the actual work.
Okay, good. And that was well received?
Yeah. Yeah, that's I found that that's more well received generally, as opposed to doing like some big information dump over 2 full days where they get a lot of good information and then like, okay, how do I go use this? I find it better if you learn a little bit, apply it, learn a little bit, apply it. So not that the workshops aren't useful to the other place, but in these instances where you're starting out, I think doing the kind of repetition, learn, apply approach is pretty effective.
Okay, cool. All right. Well, and so, we're coming near, I think you're looking at the clock on my phone here, I think we're coming near the end of the hour. So, thank you for putting that together, Kyle, and thank you for taking the time to talk us through it. That was really good, and it was great to have a different kind of industry on here. Kyle, is there any, I know you're pretty active on LinkedIn, are there any other contact details you wanted to hand out? You certainly don't have to. As I said, people can contact you through us if need be, but is there anything else you wanted to put out there?
No, yeah, I would recommend connecting with me on LinkedIn. As you said, I am pretty active on there. I do like to share my thoughts and then hopefully engage others to provide their thoughts about my thoughts so we can learn, because my thoughts aren't always right. But also, I'm happy to give out an email address if people want to contact me that way. But I can provide that to you. You guys can probably send that out with the slide deck maybe, or include that in the slide deck. Would that be possible?
Yeah, we could do that kind of thing.
Okay. Yeah.
No problem. So yeah, thank you again, Kyle. This has been really good, and the recording will be available on YouTube, I believe. And Kyle, myself, please get in touch if you have any questions at all about anything we chatted through today, or if I should continue to remind people we are trying to get more and more guests and a broader cross section of guests. So starting to branch out. As I said, Kyle and I have not worked before, but we've met each other sort of online, I guess, and run into each other that way. So if anyone would like to participate in one of these webinars, please let me know, and I'd love to chat about that. Any other questions about any other OpEx related stuff, please send us a note or get in touch with us via email, LinkedIn, whatever. And that'll be it for today. So thanks, Kyle, and thanks everyone for listening to the webinar.
Thank you.